Every major central bank on Earth, from the Federal Reserve to the Bank of Japan, has a boss, a completely private, sovereign institution hidden inside a strange, circular tower in Switzerland. They make the rules that govern your savings, yet no one voted for them, no government can audit them, and they are legally immune to the law. This is the Bank for International Settlements. Most people think their own government controls their country's economy. But whenever your local bank tightens credit, restricts your loans, or changes how much cash it's allowed to keep in the vault, it's obeying a secret set of rules called the Basel Accords, rules drafted behind locked doors in Basel, Switzerland, with zero public visibility, by a committee whose members were never elected by anyone. But here is the part that should actually terrify you. Their invisible grip on global money is about to become absolute. Right now, this same institution is quietly running 2 live experiments, one to rewrite what money is, one to hand its movement over to AI. The blueprint for controlling the future of your wallet is already running, today, inside that tower. Start with the building itself. In 1930, 10 central banks signed the Hague Agreement, creating an institution to manage Germany's World War I reparations. Basel, Switzerland became its home. Today, it has 63 member central banks, spanning nearly every major economy on Earth, from the Federal Reserve to the People's Bank of China. In 1987, Switzerland signed a headquarters agreement, granting the Bank for International Settlements something almost no company on Earth has: legal inviolability. Swiss police cannot enter the building without the express consent of the BIS president or general manager. The bank polices its own premises. Its assets, gold, currency, securities, are immune from seizure under Swiss law, in peacetime or war. It pays no Swiss taxes. Its senior staff hold diplomatic status and lifetime immunity for anything done in the course of their duties. Its own balance sheet holds 431 billion IMF special drawing rights, roughly $580 billion, including more than 100 tons of gold. It is, functionally, a sovereign microstate built for central bankers, operating inside a country that has agreed not to govern it. Above it all sits a round, 69-meter, 18-story tower, finished in 1977, overlooking Basel's main train station, designed, according to the bank's own records, from an original 82-meter concept. Every other month, on a Sunday evening, the governors of the world's most powerful central banks gather in Conference Room E. No official minutes are taken. The meeting lasts about an hour. Then they move to the 18th floor dining room, where the real conversations happen, off the record, until close to midnight. This isn't new behavior. The bank kept operating straight through World War II. In March 1939, days after German troops occupied Prague, the BIS carried out an order moving Czechoslovakia's gold reserves into a Reichsbank account, a transfer later revealed to have been made under Nazi duress. A member of the British Parliament called it, at the time, the rape of Czechoslovakia. The institution survived the scandal completely intact. Inside that tower sits the Basel Committee on Banking Supervision, formed in 1974 after a small German bank's collapse rattled global markets. Its job? Decide the exact percentage of capital every commercial bank on Earth must hold in reserve against its loans. That single number is the dial. Turn it up, and banks stop lending. Turn it down, and money floods back into the economy. In 1988, Basel I set that number at 8% of a bank's risk-weighted assets. In 2010, after the financial crisis, Basel III raised the core requirement from 2% to 4.5%, plus a 2.5% buffer, 7% in total. No president signed these rules into law. No parliament debated them on the floor. A committee of unelected bankers in Basel wrote them. More than 100 countries adopted them anyway, and the final phase-in was delayed for years and is still rolling out today. That committee has more direct influence over recessions and credit booms than any elected government. When it tightens the dial, mortgages get harder to approve, small business loans dry up, and layoffs follow 18 months later. When it loosens the dial, credit expands and asset prices climb. The people who turn that dial were never on a ballot, anywhere in the world. In April 2024, the BIS launched something with a much bigger ambition. Project Agora, Greek for marketplace, brought together 7 central banks, including the Federal Reserve Bank of New York, the Bank of England, and the Bank of Japan, alongside more than 40 private institutions: JP Morgan, HSBC, MasterCard, UBS. Their goal: build a single unified ledger that fuses tokenized central bank reserves with tokenized commercial bank deposits. By May 2026, the prototype was working, and the Bank of Canada joined days later. The report confirmed that tokenized commercial bank deposits could settle atomically across multiple currencies on a shared programmable platform in real time. Tokenization means turning money into programmable code, and programmable code can carry conditions, money that only unlocks for specific purchases, specific locations, specific dates, written directly into the currency, enforced automatically with no bank teller and no human judgment involved. This isn't speculation. It's a working prototype, backed by the same institutions that already set your bank's reserve requirements. The Institute of International Finance coordinated the private sector side. JP Morgan, HSBC, Deutsche Bank, Swift, MasterCard, and UBS all took part. The same committee that decides how much capital your bank must hold is now the body designing the rails your money will move on. Programmable rules and programmable money, engineered by the same unelected hands. Then, on June 4th, 2026, the BIS announced Project Logos. Built with the Bank of England and Germany's Bundesbank, it puts large language model AI agents to work as autonomous portfolio managers inside a simulated financial market, testing how machines trade, allocate capital, and react to constraints, with no human in the loop. The stated concern is real. When every major firm runs AI trained on similar data, their trading decisions start to correlate. By June 2026, the Bank of England confirmed that agentic AI already runs inside more than half of all finance firms. Deputy Governor Sarah Breeden warned that current rules were never built for autonomous agents whose correlated behavior could trigger a market-wide meltdown. Weeks later, the Financial Stability Board published its first draft rulebook for AI in finance, and G7 leaders ordered their own finance ministers to assess the risk. Research from NYU that same spring found the risk isn't gradual, it's convex, meaning past a certain point, every additional bank that adopts AI trading makes a systemic crash disproportionately more likely. The Bank of England is now designing a market kill switch. The BIS's own answer isn't to slow this down, it's to simulate it, refine it, and prepare the architecture to run it globally. Put the pieces together. A sovereign institution no government can audit. A programmable ledger that can write conditions directly into money. Autonomous AI agents trained to trade without human oversight. For professionals inside finance, this means the capital and compliance rules you follow every day already originate from a body with zero electoral accountability. And within a few years, so will the code your bank's money runs on and the algorithm that decides whether your loan clears. For individuals, it means the physical cash and simple bank deposit you rely on today are being redesigned quietly into something programmable, trackable, and conditional by an institution that pays no taxes anywhere and cannot be sued in the country that hosts it. For builders and operators, the opening is in transparency. Independent audit tools, on-chain tracking infrastructure, and custody systems built specifically to verify what a closed, unelected system will never disclose about itself voluntarily. The analogy isn't a new bank entering the market. It's closer to what happens when the referee starts playing for one of the teams. The BIS was built in 1930 to referee international finance from a position outside any single government's reach. 96 years later, that same referee is writing the code, running the AI simulations, and pouring the concrete for the rails its own referee decisions will one day run on, with no scoreboard the public is ever allowed to see. No one voted for the Bank for International Settlements, no government can audit it, and it is now designing the programmable, AI-run architecture your money will run on next. The dial was always invisible. Soon, so will be the hand that turns it. Drop a like if you learned a thing or two, and subscribe to the channel so you always know what's happening behind the curtains and how the world is changing. Take care, and I'll see you next week.